Certificates of deposits, CDs, continue to be worth considering as a component of your savings strategy in 2025. Yields on competitive CDs increased to historic highs in recent years, thanks to the Federal Reserve raising its benchmark rate 11 times in 2022 and 2023. Although the Fed has cut rates 3 times in recent months, yields on competitive CDs remain higher than they've been in more than a decade, outside the current rate cycle. The Federal Reserve raised interest rates at the fastest pace in 40 years during 2022 and 2023 in an effort to rein in inflation, with savers seeing the best returns on savings accounts and CDs in more than a decade, says Greg McBride, CFA, Bankrate chief financial analyst. Nearly 40 years ago, CDs were considered great investments. The average annual percentage yield, APY, on a one-year CD was over 11%. But starting in 2009, in the aftermath of the Great Recession, average rates on shorter-term CDs were middling below 1% APY. And in the wake of the COVID-19 pandemic, the average yields for all CD terms, including 5-year CDs, plunged below 1% APY. But in early 2022, CD rates started to climb back up with the onset of Fed rate hikes. APYs peaked in late 2023, before seeing some declines as banks anticipated the Fed would lower its benchmark rate in 2024. In January 2025, the average one-year CD has an average of 1.95% APY. The most competitive banks are offering APYs of up to 4.4% on one-year CDs. Here's a look at the historical ups and downs of CD rates and some background on rate fluctuations through the decades. The U.S. faced 2 recessions in the early 1980s. That's when CD yields peaked. On average, 3-month CDs in early May 1981 paid about 18.3% APY, according to data from the St. Louis Federal Reserve. The reason interest rates were so high in the 1980s was due to high inflation. With inflation, the cost of goods and services rises and your money doesn't buy as much. And so, while savers enjoyed higher rates on their CDs, their spending power took a hit. Interest rates were significantly higher in the early 1980s as the Federal Reserve, led by Paul Volcker, used high rates to corral double-digit inflation, McBride says.